Hi, I'm Luke Lango, and this is Investor Place Quick Picks, where we communicate to you some of the market's best investment ideas in just 10 minutes.
America's leading innovation investor, Luke Lango's Investor Place Quick Picks.
Today, we're going to be talking about, without a doubt, my favorite EV charging company in the market. The name is Volta, ticker SNPR. Now, Volta is not a well-known name in the charging landscape, right? You have ChargePoint, the leader in EV charging. You have EVgo, you have EVbox, you have a lot of names here. Volta is not one of the names that gets thrown around all that often. But for two major reasons, Volta is my favorite play in this industry. And I think long-term, this stock is going to be the one that scores investors, patient investors, 10x or greater returns. Not ChargePoint, not EVbox, not EVgo, not any of those. Those are already priced for enormous success. Volta is not, and Volta could end up being the most valuable EV charging company of them all. Here's why. So, as I said, there are two major reasons that I like Volta in the EV charging landscape. The first has to do with Volta's vision and the way they look at the market, their strategic execution for growth. A lot of people think of the EV charging landscape as simply, okay, swap out gas stations with electric vehicle charging stations. Cool, bam, problem fixed. But why? Right? Gas stations were built as separate locations because you cannot put a gas pump in front of a Target. You can't put a gas pump in front of a Kohl's or a Macy's. You just can't do that. So you had to build separate gas stations. But electric vehicle charging stations, well, I'm sure as you've seen all around you, they can be placed in front of gyms, Targets, Macy's, Kohl's. They can be placed wherever so long as there's power. Now, because of that, there's no need to have this separate gas station or EV charging station anymore. That's going to become antiquated. The future is a place where you charge where you go. You go shopping, you go for groceries, you go to the movies, you go to the gym, wherever you go, you pull up and you plug in your car and it charges. It's going to be charging where you go. Now, I haven't seen a lot of charging companies, ChargePoint, EVbox, EVgo, etc., talk about that massive shift in the market, probably because when you add it up, the amount of dollars that are spent at a gas station today are going to be significantly lower than the amount of dollars spent at an EV charging station in the future. Hopefully, right? One of the big pluses of EV charging is it's going to cost less to refuel, recharge, refill your tank. So there's actually a decrease in value. There's economic value destruction as we go from gas stations to EV charging stations. So where is the growth? Well, the growth is in the shift in consumer spending, because no longer are you going to a gas station and spending $80 and then maybe $5 on a candy bar. You're going to get rid of that 80, you're going to spend maybe $2 or $3 or $4 or $5 charging, and you're going to take all that money, you're going to spend it at Target, you're going to spend it at the movies, you're going to spend it out at dinner. So there's a whole shift in consumer spending going on around EV charging. That's the big growth story here. Now, Volta is the only company that seems really plugged into that growth narrative. They are designing all of their chargers and locating all their chargers in highly trafficked consumer locations, in front of Whole Foods, in front of movie theaters and gyms. They're putting their chargers there on the idea that the shift in economic value here is not really from refilling your car with gas to recharging your car with electricity, but rather in how you're spending the dollars surrounding refueling, surrounding recharging. They're the only company plugged into that from my knowledge, and they're leveraging AI and data-driven analytics to put their chargers in places where it makes most sense in the context of that enormous consumer spending shift. I love that strategy. I think it's a winning one. I think it sets Volta up for some serious long-term success versus other competitors in this space. Now, the second big point that I really like about Volta, and this is far more important than the first point, though it ties back into it, is the fact that this really isn't even a charging company. This is a digital advertising company. So as you can see on my screen here, this is a Volta charger. Big box, Look what about 50% of the box is. It's this digital panel. Now that digital panel is where Volta intends to put a bunch of digital advertising space. They want to run ads there. So it's like a social media feed or, a digital media platform that is running ads. Now, why is that going to be successful? Because let's go back to point one. Volta is strategically positioning all of their chargers in locations where there's going to be a surge in consumer spending, in front of Whole Foods, in front of Target, in front of Macy's, so on and so forth. So if you're a brand that has just landed at Target, if you're a clothing retailer that has just landed in Macy's, has some shelf space in Macy's, or if you're a foods company and you just got some shelf space at Whole Foods, what are you going to want to do? Put your ad right there so that when the consumer pulls up their car, plugs in their charger, and looks at this big digital display screen, they're going to see your product. Then all of a sudden, it's top of mind. When they see it in the store, they might buy it. Chances are significantly higher they're going to buy it. So this digital ad model is really the key that brings all this together. Now, it's really, really important because not only does it make a lot of sense, and it does make a lot of sense, but it's also a software model. Software business models are highly scalable, super high margins. And because it has super high margins, basically, Volta can subsidize its charging with the digital ads. So Volta is actually the only EV charging company out there that offers free charging for a certain amount of time. Everywhere else, you got to pay $2 for the first 30 minutes or $2 for the first hour, whatever it may be. Volta gives you that for free because they're not making money on charging. They're making money on the digital ads they sell at the charging station, which are strategically located in positions where those digital ads will have a lot of economic value. So I really think that Volta is just this genius EV charging company. I mean, truly genius ahead of its time. Now, don't get me wrong, I like ChargePoint, I like EVBox, I like EVgo, I like all those charging companies because, again, look around you. There are so many different gas station brands. There's going to be a lot of electric vehicle charging brands. There's room for multiple success stories in the market. But Volta's differentiated. EV technology is pretty commoditized, not that hard for companies to do. And a lot of these companies are not differentiated in technology. Volta isn't either. But Volta has figured out a way to differentiate itself in other ways. Strategy and business model. And I think those differentiating factors will ultimately unlock a lot of shareholder value in Volta stock over the next several years. Again, the market's asleep on the wheel at this name. I think that's your opportunity. Over the next 2, 5, 10 years, this is a stock that really could be the biggest winner in the EV revolution. I think it's a 10xer. It's a 10xer in the making. I really believe that. So if you have patience, willing to buy and hold, willing to stay here, stay the course, I say buy Volta stock, forget about it, check on it in 5 to 10 years. Pretty sure you'll be pretty happy. Well, that's all we have for this edition of Investor Place Quick Picks. I hope you like what you saw. If you did, please subscribe, hit the notification bell, smash the like button, or come over and visit us at investorplace.com, where we have some of the market's best analysis. Until next time, cheers and happy investing to all.